Good morning, this is Jeff from Charting the Markets, and this is the pre-market webinar for the morning of Monday, the 23rd of March. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts, and I'm not here to issue trading signals. This is a video for paying subscribers. That's at chartingthemarkets.substack.com. It's published on YouTube after a delay of 24 hours. All right, great. Well, we're seeing a bit of a rally here this morning, quite a strong one, and that is because we are seeing some real signs that Trump may be about to tackle here. At the moment, he's saying that talks with the Iranians were good over the weekend, and so he's pulling back for a couple of days. And the Iranians are denying that. And if you could see me, you'd see me wearing my shocked face, where I suspect the Iranians haven't actually talked to Trump at all. But I do think that he's probably been advised by an awful lot of people that his best move here might be to declare victory and leave. Because all the other outcomes could be in. So we will see how that develops. But in the meantime, we are seeing a strong rally, and I'm thinking that may have legs. And I'll talk more about that on the bigger picture charts. But here we've got 60-minute buy signal, which is in the process of reaching target on ES. We had a buy signal fail on NQ, but last night where it was going lower, we had another one develop, and that is now fixed and is reaching the possible near miss target. On RTY, we've got we didn't have a buy signal before, so one hadn't failed, but another weak one has developed, and that is now reaching target. And on YM, we still had the original buy signal, and that's now reaching target. On DAX, the original one had just about survived. Otherwise, we would have set up another one, but that's now reaching the possible near miss target. On ESTX, we had the original buy signal from Friday morning failed, and we had another one, a better one fixed, and that's now reaching the possible near miss target. And on Nikkei, the original one failed. We didn't develop another one. But nonetheless, if we had, that would be reaching the possible near miss target too. So this is a pretty decent rally. And let's have a look and see how this looks on the bigger picture. Now, one thing I was talking about in the bigger picture last night, I was talking about the weekly chart, and I was talking about this test of the 50-week moving average. This is a major level on the SPX, and this is quite often support or resistance. You can see this rally here stopping here and then gapping over it. You can see going back, you can see this is quite often, I mean, in a downtrend, this tends to be resistance. And this is actually a pretty significant level. I was wondering whether we might see a bounce here, and here is the bounce. And that actually means more on the bigger picture chart as well. We reached the original head and shoulder target on. Sorry, someone's blowing up my phone at the moment. We'd reached the original head and shoulder target on SPX in the 65.40 area, and we'd reached the possible head and shoulder neckline I've been talking about, which is down here in the 65.21 area. This could be the start of a right shoulder for that head and shoulders. Doesn't have to be, of course, but this is something I was speculating if we were to go down. And we weren't at the 3SD lower bands yesterday. On SPX, we were at the 3SD lower band on Friday on the Qs, and we saw a slight break below that, and again we reached the double top support here. Not looking for a right shoulder here, but you quite often see a breakdown below a pattern and see a bounce. It doesn't necessarily mean that it's going to be good news for that long, but it could give us a decent rally. In terms of Dyer had not quite reached the original head and shoulder target, but it had reached, I was talking about again yesterday, the possible one of the two possible head and shoulder necklines here. Now we could form a right shoulder here with a bounce and then come back down. Ideally, that would be in about the right shoulder high would be in about the 481 area, but we could see a bounce here and then a move down again if it's going to go down. So we will see how that develops. But this wouldn't be a bad place to see a decent bounce. In terms of IWM, this on the hourly chart, I'd drawn in what was happening here, which is that we've actually got a head and shoulders which has broken down with a target in the 216 area. Now, if we get over 257, 19, then this would fail with a target back up at a retest the high. But in the meantime, any rally up until then would just be the rally we quite often see after a pattern breaks down. So I am wondering if we might see a rally here. I'm wondering if it might have some legs. I'm wondering if we might actually possibly be seeing the start of a move back to the high. The question is, what are we going to see in terms of the war in the next few days? If it continues and we start losing desalination plants and large sections of the key infrastructure, oil infrastructure in the Persian Gulf, this could really, really, really develop into something bad. In terms of world recession, massive supply chain shock, inflation. I was talking about the possibility that an inflation shock might set off the bonds patterns I've been following for ages, which have targets at levels which would be disaster for a very currently highly indebted America, and frankly for other highly indebted countries like, Britain, France, Italy, Japan. So continuing the war at this point could risks major disaster. Stopping the war is a problem. We've effectively upgraded Iran's leadership to a younger, more fanatical group with more of a grudge. They've established their control of the Persian Gulf and seem to be moving towards an idea where they're going to basically be charging a toll for anyone going through it from now on, and they're probably going to continue to be very keen to get all of the American bases out of the Persian Gulf. There are a variety of problems here. Nonetheless, given that a continuation of the war risks making much of the Middle East uninhabitable, of the Persian Gulf, excluding Iran and Iraq, which actually have decent water sources, most of the rest are very heavily dependent on desalinized water, and in the event that the Iranians do serious damage to that, they kind of need that to live. And also, in terms of the damage to the infrastructure, this is something that Qatar was saying the other day, that the infrastructure damage can take several years to fix, i.e. it might degrade the ability to produce oil for several years to come, and that could be a very major problem. So I don't think any of the choices here are good, but if Trump is seriously thinking of tackling here, then I think really that might be his best move. So I'm not thinking that would be a bad move necessarily at all. In terms of DAX, not anywhere particularly significant here. Nikkei, not anywhere particularly significant either. No significant pattern. We've still got an RSI 5 buy signal on Nikkei, and we still have one. No, we've lost the one on DAX. We have a possible RSI 5 buy signal brewing on IWM here, and I'm pretty sure we've got one on Dia as well. Hang on, wait a second. Sorry, wrong thingy. Looking at Dia, yeah, we got a possible RSI 5 buy signal here. I'm brewing here too. We do not have one, I don't think, on Qs. Nope, we lost the divergence. We didn't have a good one there anyway. And SPX, we lost the divergence again on Friday. But we've still got two, and this is a very obvious area where we might find support. So it is something I'm thinking about. Okay, let's have a look at DX. Now, I've been talking about the effects of the war and what's going up and what's going down. DX has been going up with the war, so obviously we've seen a significant pullback here. ZB has been going down with the war, and this has seen a significant rally overnight. Oil obviously has been going up with the war, and we've seen a serious pullback overnight. So gold has been going down with the war so far, and we've got a strong rally. That's not necessarily, correlation is not causation, but to be honest, everything is kind of developing as you would expect it to be. DX is interesting because we're actually in a bull flag here, and it's quite a nice bull flag channel. That hasn't broken down yet, and I'm still leaning towards it breaking up, but it could be, if the hostilities are going to cease, that this move up on DX is going to cease, and the current double bottom that has broken up larger double bottom that's breaking up might fail too. Not seeing an awful lot saying one way or the other on the other currencies. USD still could be a bear flag forming. GBP USD, this kind of looks like a bear flag too, but it could be part of a larger double bottom. USD JPY, seen a pullback here, might actually see this double top, which I'd almost written off, make target in the 157.37 to 157.23 range. USD CAD still looks like a bear flag, weirdly. US Australian dollar, we could be forming a head and shoulder, right shoulder here. NZ, this could be a double bottom. So keeping an open mind, but the further it would appear that the closer we get to peace, then the lower the less buying pressure there will be for USD. In terms of a rally here, this actually is a buy signal, haven't marched in yet, but a little double bottom which is broken up and already made target. I'm thinking in terms of a rally here, the pattern setup seems pretty clearly on bonds, indicating that bonds are likely to go lower. So ZN, much the same. I'm watching to see if these declining resistance trend lines hold. We are not close to testing those at the moment. In terms of the Brent crude, nice move down here. Got down from basically 115 to 96, rallied and is coming back down for a retest, it would appear. CL, we've seen a break below the rising support. That doesn't really mean a lot because rising support means most when you keep getting higher highs above the line, and we actually haven't had a higher high since here. So, but that's interesting, and it's back down, coming back down to the 85 area. If the war continues, I think these are all going way, way higher. If the war stops, then that actually could change the maths considerably, because if the US just pulls out, even if in effect that is a defeat, and they're pulling out just because the oil price won't stand it, nonetheless, that would have a very good impact on the oil prices. Now, it won't necessarily stop the Strait of Hormuz being barred. The Iranians currently seem to be saying, not in talks with the Americans, they haven't talked to the Americans, I don't think, but they are saying that they want one of their war aims is to get all of the Persian Gulf American bases out. Now, the question is, how seriously do they feel about that? Because if they feel seriously about it, then of course they'll keep the Strait of Hormuz closed, and that of course could mean that the Americans attack again. So we'll see how that develops. But I think in terms of just easing the oil market, it could ease the oil market quite a bit anyway, because it could mean that countries which aren't hostile to them, like China, potentially Japan, and frankly, quite a lot of the Europeans, Britain, etc., may well actually just basically make separate arrangements with the Iranians. And you could see the restoration of quite a lot of the flow through it. Equally, you wouldn't have the additional threat of the Red Sea being closed, which is very much a potential that's on the table, and the Houthis and the Iranians have both been talking about. So it would prevent escalation. It would stop likely the attacks on all of the Persian Gulf states by Iran. So it would be a significant improvement, and it might free up energy prices quite a lot. We will see. Not necessarily, and there would be issues, but nonetheless, that could be very promising. In terms of the NG, we weren't seeing much effect, and that's what effect we were seeing seems to be rapidly disappearing. GC, we're seeing a nice little rally here, not much, and all of the targets I gave yesterday in my bigger picture are still valid, but it could be that we'd make a low earlier. SI had gone a little lower, so that made the lower low I was looking for. GC had made the lower low. Palladium's made the lower low. Platinum has actually made the lower low as well. So potentially, this could be the end of the flag and a significant low on metals. We'll have to see how that goes. HG, seeing a rally here too. 60-minute buy signal is reaching target. We'll see how this develops. But it is a promising sign, and at the very least could give us a sustained rally which could last weeks. In terms of KC, we reached the target on the double bottom. This still kind of looks like a bear flag forming, possibly an IHS, but it looks more like a bear flag. SB, pulling down a bit, possible weak 60-minute sell signal brewing. CC, actually kind of looks like a bull flag after a small move up. I'm wondering if this is setting up for a retest this high in the 3,500 area. CT, kind of looks like a bull flag. Lumber, might be seeing a bit of a pullback here, but there's not much sign at the moment of anything bigger. Wheat has wheat. One thing I'm seeing from the end is we're not really seeing much impact on cotton yet, but wheat has gone down sharply. Corn has gone down sharply. This is backing up what I was talking about with these two are very vulnerable to fertilizer going through the strait, which, of course, if Trump's going to tackle, we may well see a resumption of that, and that actually could mean that the bullish setups on corn and soy aren't going to play out in the near future. Soy, this kind of looks like a bear flag. Wondering about a move down to the double top target in the 117 to 120. 1117 to 1121 area. ZL still looks like a bull flag forming. Live cattle still looks like a bull flag breaking up towards a retest of this high. And lean hogs, I'm wondering if we're pretty close to a low here. We've got a nice looking flag. Ideally, it would go a little lower, but it doesn't have to. We could be returning back up to retest these highs. All right, great. Let's have a quick look at questions. Okay, no questions. In that case, I think that's a wrap. Everyone take care. I'll catch you guys tomorrow morning. Cheers.